So, if this market correction continues, you may get an opportunity of a lifetime once again with SOFI stock. Now, lots of people talk about 100x's or secret formulas or secret spreadsheets or option trades that show you the path to millions of dollars really fast, but that is all fool's gold, and that's not the type of opportunity we are talking about today. So let's talk about exactly how to actually take advantage of a once in a lifetime type of opportunity with SOFI stock. No magic or unicorns or hype to the moon trash or ridiculous spreadsheets or tools necessary at all. Just the straight truth, because anyone can do it and take advantage of this once in a lifetime opportunity. And that's what we do right here. So make sure you like the video if you like getting the truth off the hype, because that is exactly what you're going to get right here today, guys. And this is going to make some of you all mad. And if I'm being honest here, that's just okay. I understand why. I understand all the hype trains and all the other narratives that are out there. If you're looking to buy 5 shares of SOFI and then have it turn into millions of dollars tomorrow or next week or, next year, or whatever the case is, and this is going to make you mad, because this is not fictional fantasy stock YouTube or X social media trash or any other stuff like that. This is the truth from someone who has been doing this over 25 years now. And this method that we're going to talk about today has proven true over and over and over again, guys. And if you don't believe me, that's fine. But I followed this exact method with Palantir being the most recent stock to work with an average of under $10 per share. So it worked in the early 2000s. It worked in 2010, 11, 12, 13, 14. It worked in 2018. It worked in 2022. Obviously, it's worked over this past year. With that track record, I'd basically call it tried and true. And if you want to work directly with me on that and become a better investor, the Black Friday sale ends today, guys, and the price is going up next year, and it will never be cheaper than it is right now. And you get to keep that price for as long as you stay a member. I haven't raised the prices 1 penny on any of our existing members. So join now. You get access to me, all the free courses, all the free coachings, the best 6, 7, and 8 figure Discord out there. So much more. We'll talk more about it at the end, but it's the pinned comment down there for those who want to jump on and take advantage. Now, to just kind of lay some ground rules right here real fast and just kind of set expectations. This is easy to understand. It's actually easy to do, but it's not easy to stick with, to be abundantly clear, guys. It's also not get rich quick either. I'm sorry, I don't play that game. That's not what I'm here for at all. I'm here to show you how you take advantage of a once in a lifetime opportunity as SOFI continues to fall here. So the first thing you must do is understand what you own with SOFI and track it. Now, I understand that can mean a lot of different things, so let me break it down for you guys. You have to understand the stock itself. You have to understand the fundamentals of the company. You have to know what you own in order to take advantage of a once in a lifetime type of opportunity, right? Let's say SOFI falls down to $9 tomorrow, okay? Not gonna happen, but let's just say that it does. Do you understand what you own enough to double up or triple up your share count in that stock? Do you understand it on a high enough level to do that confidently? I know I most certainly do, but I know a lot of folks out there don't understand what they own. That's why they didn't buy the dip on SOFI at $9 in March, April, because all the YouTubers were kind of negative, or a lot of them were negative, especially the bullish ones. Some of them have flipped negative too. But if you understood what you own and you were tracking it on earnings, you saw it as a golden opportunity, a once in a lifetime type of opportunity, getting a massive dip in a great stock. And guess what? That means you have to understand banking. So I've heard a lot of other sentiment, a lot of other negative or bear cases, and I just laugh at them, because I'm like, that number or that statistic or that particular ratio, that's exactly what somebody who's carrying loans on their books is supposed to look like. That's part of banking. That's what that number is supposed to be. Now, if it was, on a different type company, if it's on Tesla, for example, I'd be extremely concerned. But when it's on SOFI or any other bank out there, I'm not concerned at all, because that's exactly what that ratio is supposed to look like, because bank accounting is very different than regular accounting. And anybody out there telling you that, I'm sorry, they just don't have a high level of understanding. And that's the type of understanding I want you guys to have with this stock. You got to understand what you own. So when those dip comes, or whenever a person who's bearish on a stock pulls up a stat that looks horrible, well, you can point at it and go, well, actually, because SOFI has a lending component, that's not concerning at all. That actually looks perfectly normal. You can do that. That's what I mean by understanding what you own on a high level. Makes it very easy to dismiss all those bear narratives. Now, some of them are there are sometimes whenever the bears have good points or points that you can't necessarily refute. But if you don't understand what you own, you can't refute any of it. Therefore, you're stuck riding this roller coaster of Anthony Noto's the worst CEO, then he's the best CEO, then he's the worst CEO, and all the other stuff that goes on with SoFi from time to time here. You got to understand what you own, and more importantly, track it every single earnings call. Number 2, you have to continue to stack shares. It does you no good to get presented with a once-in-a-lifetime type of opportunity in a stock like SoFi and then just simply buy a batch of shares and stop. You got to continue to stack those shares of SoFi. Think about when it was $4. Think about Palantir at $7. Whatever the case is, the only thing all of us are all saying, and hopefully you're not saying that, but you're going to end up saying it regardless of how much you add, is you're going to say, I wish I had bought more, right? That's what I mean. Just continue to stack shares. Share count is what matters over the long run, not any of the other sort of stuff. Don't worry about blowing up your average or any of these other things that are just simply good for taxes and ego. That's it. It's not good for anything else. You got to continue when you're presented with once-in-a-lifetime opportunities, just simply stack shares. Don't worry about anything else. And that leads me perfectly into number 3, which is don't trade in and out. I got it. In a hot market, everybody thinks they're a trader. Everybody thinks they got a feel for it, trading in and out of stocks. But I'm telling you guys right now, sooner or later, it's going to get you burned and you're going to lag the people that just simply bought and stack shares on top of stacking shares. That statistically, that is what is proven out. Those based upon studies done by Wall Street. We've had members in our group that have done back tests and back studies on this. There are other banks out there that have done these same exact studies. Every single one of them points to buy and hold always outperforms trading in and out of stocks. But yet us as retail, without supercomputers, without Harvard MBAs, without, inside information, all the other things that all the other traders who also fall into that same exact statistic can't do, we immediately think that we can because we get away with it for a little while. Sooner or later, it's going to burn you and you're going to end up losing out. You're going to end up having to either own no shares or end up having to way overpay those shares, or you get fancy with an option, play or whatever the case is, and your shares end up getting called away. There's 1,000 different things that can happen when you start playing those types of games that eventually have you underperforming the market. So I got it. Some of you guys out there think you can trade and you can beat the statistics. Maybe you are that exception. No problem there. But I know if you're like me and you're just the average investor and you're like everybody else in regards to your skills in trading, don't trade in and out. Simply stack those shares. Number 4, ignore hype and noise. I said both. I said hype and noise, meaning both, good hype and negativity, noise, bad. Oh my gosh, SoFi's going nowhere. It's just a bank, all this other stuff like that. Or, oh my gosh, the super mega gamma squeeze is coming tomorrow and it's going to be 150 by the end of the month and stuff like that. You got to ignore all that sort of stuff, especially when you're presented with a once in a lifetime opportunity, because guess what's going to happen? You're going to believe the hype. Let's just say we'll use hype as the example here. You're going to believe the hype. Oh my gosh, I'm getting a steal deal. You identify it. You know exactly what you're getting. You want to stack shares and you'll start stacking up your shares. You're not trading in and out. But then what happens whenever it gets cut in half again? Oh my gosh, it went from, $9 that you were stacking shares on all of a sudden down to $4.50, $5. Let's just say that happened, for example. If you were listening to the hype and you were expecting 150 next year and it's quick turnaround, all that sort of stuff like that, guess what? You're freaking scared out of that stock. You're kind of wondering, oh my gosh, I made a terrible mistake. What in the world happened? It's not where I'm expecting. You're totally lost at that stage. All of a sudden emotions kick up and you end up making the mistake of selling at a low, or whenever it recovers back to $9, you just feel so good to be back to break even that you end up getting out of the stock way, way, way ahead of the run because you were expecting a run. You didn't get that hype run. You were disappointed. And in that disappointment, you end up making terrible decisions on the back end there. Hey, a lot of folks did that at the end of last year, coming into this year, right? It was riding high up over $20. We're going to the moon. $75 is, happening by the summertime and all this other crazy, hypey nonsense was happening. And guess what? You got cut in half, right? Or more than half. You got all the way down to $9. And a lot of folks sold at that stage instead of holding and just basically stacking shares at that lower level because they were expecting hype and they ended up getting cut in half instead. That's why you have to ignore hype and of course ignore the noise as well, because if you listen to the noise, you didn't buy at $9 like we should have back in March, April timeframe, whenever that was there, whenever you had an opportunity to buy at $9. You got to ignore both of those. And number 5, hold for the long run. And guys, let me be clear here. This is not what a lot of you guys are thinking out there. What I mean by hold for the long run, I'm not talking about hold for a year. I'm not talking about hold for 2 years. If we're talking about making life-changing money, once in a lifetime type of opportunity, that means we're talking about holding for decades, okay? At least a decade, maybe 2 decades. And I know that seems like, oh my gosh, Luke, that's forever. You always say don't project out that far, and you're absolutely right. I'm not telling you to project out that far. What I'm trying to tell you is whenever you buy and you hold for the long run, unless you're needing that money anytime soon, for the vast majority of us, if you're like me and you're in your late 40s, guess what? You got another 35 years worth of investing left. 35 years. Hey, I'm not going to need all these shares of SoFi over the course of that 35 years, right? I can afford to wait some time. Give it a decade or two. That's how you get life-changing types of money, is by simply holding, keeping the long run involved. And of course, remember, you're tracking the earnings quarterly throughout all that sort of thing. So the whole, somebody will always run down the comments and say, oh, well, what happens if they stop executing after 5 years and you were holding till 20? You just lost out, right? No, I didn't, because I'm tracking the earnings. I'm listening to the earnings calls. I'm seeing exactly what's coming on in the company. And at that stage, that would be a fundamental change whenever they quit executing like they have been executing outstandingly for the past, really 3-4 years here. All of a sudden, that's a change fundamentally, and I would get out of the stock at that stage, take my gains, and move on into another stock that I could then hold for the long run as well. And if you really want to learn valuation on a high level, you want to have high level discussions, be able to ask me questions about banking, how to ignore all that noise with SoFi, and be able to take 5 free courses, be able to get your free coaching, be a part of the best 6, 7, and 8 figure Discord out there, get 3, 4, 5 videos a week directly from me, be on our live Q&As where you can talk directly to me, ask me anything you want. Make sure you check out the pinned comment down there for the Black Friday sale that ends today, guys. The price is going up next year. It will never be as cheap as it is right now, and you get to keep that price for life. I've not raised the membership price one dime on anybody that has joined. You've gotten to keep that, whether you were on the $9 tier or whatever the case is. You get to keep that throughout the entire time. We got big things coming this year to the group. Obviously, as well, we continue to add every single year more and more and more to the group to bring you guys more value. So check it out. It's the pinned comment down there. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. Thanks for watching, and we'll see you in the next one.